Hey, my name's James Nicholson and welcome to my YouTube channel. Now in this video, I want to talk about should you buy a property today or should you wait till 2024? It's a great question and we're going to look at the pros and cons on both of those scenarios in this video. So make sure you stick around till the end. Now, if you haven't done already, please subscribe to the channel and hit the bell notification. We're on our way to 7,000 subscribers now. And as I've said in previous videos, the views keep going up and up on this channel. Beginning of last week, we were at 70,000 a month. Then we got to 75,000 a month. And now we just hit over 80,000 views in the month, which is absolutely crazy. So how can you help me on that? Do your bit by smashing the like button, guys. That'll take you 2 seconds. That is a signal to YouTube to push this out to some more people. So why would you buy in this market? Because interest rates are high, house prices are also still high, and there's a potential that the market's going to crash, isn't there? And that's what a lot of people are hoping or maybe expecting. So should you buy now or should you wait? Well, let's look at both sides of the coin. Now, if you're sitting on some cash, then maybe waiting could be a good idea, because if house prices do drop 20%, then of course, when you buy, you're going to get that deal 20% less than you are today. So that is a great opportunity. But we don't have a crystal ball, do we? Nobody knows for certain if the market's going to go down, how far the market's going to go down, or when the market's going to go down, because this is a really slow, drawn out process. The property market moves very, very, very slowly. We've had asking prices are finally starting to come down according to Rightmove. We're seeing that sales prices are marginally going down and we expect more to come, but nobody knows for certain. You see, one thing that a lot of people haven't taken into account is, in real terms, properties already crashed 10% because of inflation. You've already had a little drop, couple of percent on the house price market this year, but you've had inflation closer to 10% for a year. So in real terms, your property is already worth 10% less. People have had pay rises, not everyone, of course, but affordability is a difficult thing as well. So if you've got cash, then I would say look for good deals. And if a good deal is there, then always buy. And so this is something that a lot of people miss out on. And so in 2008, 2009 and 2010, obviously we had a very volatile market. We had the credit crunch. And the biggest problem that people had at that stage was that you couldn't get borrowing. And that was the real difficulty and one of the reasons why the market ended up crashing as much as it did. Now, that is starting to come true at the moment. And so you will find that getting money at the moment is definitely harder. It's slower. They're really looking into every single eventuality and possibility in the market. You've got to have a squeaky clean credit rating, but it doesn't mean that you can't buy if you're creative. So what type of deals should you buy or consider in this market? Well, there's two main investment strategies that I think can work quite well in this market. Firstly, one that I wouldn't really focus too much on is buy-to-let. Buy-to-let is tough, not going to work in the south at these interest rates with this price. Now, that doesn't mean that it won't work with these interest rates. It means it won't work with these interest rates at today's market value. So if the market comes down, then buy-to-let in the south might look attractive again. In the north, maybe, yeah, it does work, and it's better than just leaving your money in the bank, but there's better strategies than that. So one I would consider looking at is serviced accommodations, SA. Now, this is likely to get more regulated in the coming months and years. And basically it means renting a property out on Airbnb, on booking.com and all these other platforms. Now, a lot of people have the perception that this is just for holiday lets, but it's not. You can do this to contractors. You can do this for people that need temporary accommodation because they're moving or doing a building project. There are tons of different people. In fact, in the Property Accelerator, we have something called the Serviced Accommodation Accelerator, which goes into great detail on how this all works. And so service accommodation is a high cash flow strategy. There's more work involved than a buy-to-let, and you can still systemize it and get teams on it, but it's a strategy that you could look at in this market. Now, one that I'd also look at as well, which we're looking at some deals at the moment, is HMOs. What we're saying is, with both of these strategies, you need high cash flow strategies in this market. Just having something like a buy-to-let that kicks out 200 quid a month, 300 quid a month, that's going to be tough, especially if the interest rates go up again. It's just really against you on that. Whereas with a serviced accommodation, you can make £1,000 to 1,500 quid a month if you do it right. HMOs, you can make more than £1,000 if you buy the right size HMO. So they might be things to consider as well. And there are landlords that already have an HMO. They own it in their personal name, so the tax isn't very efficient. And they're starting to come on the market now. There's some good deals that I've looked at, and there's tons of these deals starting to come through now where the landlords just want to get out the market. You can buy those in a limited company, so that's more efficient. So this is one or two strategies that you might consider. Now, if you're going to buy in 2023, you also need to make sure that you buy below market value. That's important, that you protect yourself should the market go down. And let's face it, we don't know for certain if it will go down. It's likely it will go down, but how far? Is it going to be 10%, 20%, 30% or 40%? No one can be certain. So what you can do to protect yourself is buy below market value. And lots of people are in a position now where they just want to offload their properties. And so you can agree a deal that gives you that extra margin in there, 10%, 20%, but also look for a deal that you can get cheaper, but then you can add value to it, because then you're going to make two lots of money in this deal. You're going to make money by protecting yourself by buying cheaper. You're going to make some money by adding value, a new bathroom, a new kitchen, an extension, double glazing, increasing the EPC. There's tons of stuff that you can do to add value to any type of property, and that's what you've got to look at. What you want to avoid right now is things like new builds. New builds are always more expensive than the market value. You lose a bit of money normally on a new build when you buy it, like you do with a new car. And so you could sit on a new build and that could go in negative equity for a prolonged period of time. So I just wouldn't be buying stuff in that market. I'm only looking at stuff that I can add value to. So would you buy in 2023? Yes, but only if you can find a deal that hits these criteria. It's below market value, which there are tons of. So if you can buy something below market value, why would you wait? Why do you wait till 2024? Because those deals will go eventually, and it needs to be high cash flow. So serviced accommodation, HMO, or a buy-to-let with a very good yield. That's the kind of deals that you need to be looking for as an investor. Those deals will work. They will continue to work, and lots of investors are investing still, and they're going to make very, very good returns from this kind of market. So don't get scared to buy, but make sure you do your due diligence. And if you want to learn a bit more about how to use these strategies, then join the Property Accelerator. It's £1. I'm going to pin a comment so you can join us and see how this all works. Now's the time to get educated and learn this stuff. Everyone says they've been waiting for the market to go down, but it's happening. The market is getting cheaper now, so now's the time to find those good deals for your business.